because it's a gross rate that they use to calculate it. Out of that 100,000, they would take an additional, I think 10,000. Yeah, an additional 10,000 as withholding tax. Withholding tax is 10% of the interest. So that is when rates are gross. And banks all use gross rates. So when they are telling you rates, ask the salesperson to please give you your rate, next rate, so that you can understand what the rate usually it comes to. Use tax advantage accounts. I spoke about your pension account and how you can use it to your advantage, how you can use it to reduce your tax, and how you can also use it to secure a mortgage finance right now. And there's several people who have done that. You can get the Merif housing, and there are lots of Merif housing schemes in Nigeria and across the country. Avoid emotional decisions. There are certain times that prices would fluctuate, but it should not be an emotional decision to sell. You may need to wait it out and the market will pick. Then keep learning. Once in a while, just read from finance books, follow trusted financial experts, and stay updated. Now, I'll wrap this up. Most times, physicians will never treat themselves. They would go to their colleagues. You wouldn't self-diagnose a complex condition. And so you shouldn't navigate your financial future without expert guidance. Get a trusted financial advisor who isn't just a number cruncher, who isn't someone who just wants to sell a product to you, but someone who is a financial partner and who would help you, guide you, walk with you, and protect your assets. At the end of this session, we'll be sharing a very short guide on how to invest as women, and we hope that you would read it and that you would digest it and apply it to on your financial journey. And we'll be here again as a women-led organization to support you as you take on that part. Thank you very much. I don't know if the moderator will want us to take questions now or afterwards.
Thank you very much, Yvonne Akintomi. Yes, thank you for the like and see the love. Thank you. Thank you, Miriam, Dr. Melkon. Thank you, Dr. Bukola. Thank you, Dr. Ire. Yes. Thank you so much. You can see the love. It's massive. Thank you so very much. I think at this point in time, you have actually said a lot. And, you said don't navigate your financial future by yourself. Yes, as a medical doctor, I'm not feeling well. Yes, I need to go and see a specialist. I won't diagnose myself. And you said that we should get a financial consultant to help us with our finances. Let's take a few questions before we move on to the next stage, and then we round up the webinar. But however, I have some questions. On the chat. Yes, so let me start with that. And then please, if you have questions, put it in the chat box. Do not forget to sign the attendance sheet. We have a attendance list there. Just click on the and then please. Kindly lift up your raise your hand. I'll call you. But let's start with this question. So, Yvonne, somebody said, what is the role of real estate? What is the role of real estate? What is the role of real estate from the chat box? Thank you.
Can you take all the questions?
Okay, let me take the questions and then we'll just give you like 2 minutes to respond to the questions. Okay, so another person said, thank you very much for the presentation. We learned a lot. Wanted to know your thoughts about high saving fintech banking online. Are they safe, Ma? Are they safe? That's the question, the fintech platforms. Then what is the role of, yes, I've asked that. Is it better to invest through banks or investment managers. How safe are platforms such as QueryRise, Wise, or Bamboo? All those platforms, I'm sure you are familiar with them. And which financial platform can one benefit from compounding interest? Which financial platform can one benefit from compounding interest? The last question here says, okay, that please, could you explain on treasury bills and bonds? You have really said a lot. You call treasury bills over the counter. I love that, the way you married it with our medical jargons. God bless you so much. Thank you. So let's give you some few minutes to quickly answer the questions. And look there if I can see anybody that has their hands raised, and I call them to unmute and speak. Thank you. Over to you, Ivan.
Okay, so the first question is, what is the role of real estate? Real estate is also a form of investment, right? And it's when you want to set up an investment portfolio, it's good to have real estate in there. But remember that the caveat there is that the real estate must be one that is transferable. It must be one that is actually yours, because right now you have several real estate companies that are selling property. They tell you that the documentation is deed of assignment, and you put in so much money, and when you want to sell it, you actually find out that you've bought nothing. You've bought a piece of paper. So, but and I'm not here to discredit real estate is good. As much as possible, try to buy real estate from trusted individuals, from trusted groups. I know that many organizations have cooperative societies, and for some of them, those cooperatives also help their members secure landed properties, or even help them build houses. So it's a good option. The only challenge there is that it is not very liquid, but it does appreciate. Now, the other question was on fintech. Are fintechs safe? Yes, term is fintech, and that's the general term. But there are some that are bank-backed, CBN-backed, and there are some that are Securities and Exchange Commission-backed, meaning that the regulator of some of them are CBN, and the regulators of others are SEC. The likes of Cowrywise, PiggyVest are SEC regulated. I'm not sure if the SEC is Nigeria or US for Cowrywise. I'm not sure, so I can't speak to that. But for PiggyVest, PiggyVest is an investment wealth management solution driven by fintech, and it is regulated by SEC. The likes of MoneyPoint and some others are regulated by CBN. Let me say this here. If you have saved 50 million in a bank today, whether it is GT, whether it is the microfinance bank down the street, if unfortunately that bank goes down, what you would get as compensation from the NDIC will be 500,000 naira, irrespective of what you have. 500,000 naira. If it is a corporate organization, you would have maximum 5 million. This is not to say that banks are not safe. The Nigerian banks have undergone recapitalization, so the likelihood of a bank going down, like it used to happen in the past, is very, very slim right now. So just something for us to think about. For the SEC-regulated entities, they do not hold your money. The monies are kept with what they call custodians. Permit me to go back to my roots. The Igbo people will say, if you have the yam and the knife, you can do with it whatsoever you please. You can cut whichever way you want. But for asset managers, the yam bank RAN nominees, Stanbic nominees, UBA, First nominees, and recently Access nominees. Those 5 institutions are approved to provide nominee service. So when you invest money with an asset management company, the money doesn't go to the asset management company, the money goes to the nominees. And that way it provides an extra.
It seems Madam Yvonne's network is breaking.
Yes, I couldn't hear her too.
Madam Yvonne, you may have to repeat a few things when you re-log in. Oh, she's even thrown out.
Wow.
Patience, please, my sisters. Thank you so much. She's going to join back and she will take it. Thank you so much.
Okay, thank you very much. Thank you so much. So while we are waiting for Yvonne to join the meeting, please kindly fill the attendance sheet so that we are able to share the recordings with you. And also because of the next webinar 2.0, we'll be able to contact you directly. Kindly fill the attendance sheet. We have only 9 people out of almost 100 that has filled the attendance sheet. Thank you. And so as a way of recap, Yvonne was saying that if you do not receive salary for 1 month, do you have an alternative source of income, either passive or somewhere? Or do you have an emergency fund set aside? In this era of no work, no pay. And she has given us several things that we can invest in, such as a treasury bill. She called that the over-the-counter prescription. She spoke about the private equity. She spoke about the bond, exchange-traded fund, and crypto. She also spoke about the crypto. She said, well, she wouldn't recommend that for some reasons. And then she spoke about the additional one that she calls the contribution. I didn't know this, that yes, if maybe I have a contribution, they won't tax that, they will add it to this and then it will not be taxed. So I can equally increase my contribution, knowing fully well that it will not be taxed. And then she spoke about the trust as well. She spoke about trust, calling it the DNA transfer, the wealth transfer. He said it is a higher level of will. And one thing that she also said, she said that we should start small. We should start with a goal. There must be an objective, and we should learn to build an emergency fund. So with this that we have heard today, I want us to put something, your favorite emoji, and then you put either, let's use love. So are you ready to be fearless? Because she said we as doctors, most times, we need to analyze things, we send to the lab before we now reach our conclusion. So are you ready to be fearless, to take the risk? So if you are, you drop 2 love emoji based on what you have heard.
Okay, so Yvonne is back. Kindly make her
Yes,
co-host
apologies,
again.
everyone. I had a network issue.
You're welcome back. You're welcome.
Okay, so I was speaking about the banks and asset managers.
Go back a bit because at a point you were not too clear.
Okay, so I was speaking about, I don't know if you heard when I was speaking about the difference between the banks and the asset managers.
Oh, no, I didn't hear that.
Okay, so I was speaking about the difference between banks and asset managers, and I mentioned that for if once anyone has monies in a bank, irrespective of what happens in the event that the bank goes down, what you will be able to get as compensation or as would be 500,000, irrespective of what you have in the bank. But for the asset managers, your assets are not with the asset manager. So if the asset manager goes down, then you can still lay claim to your funds. And why is this so? Asset managers their monies come through a custodian. And that is a second layer or extra layer of protection. So, and I gave the example of the Igbo adage that if you have the yam and the knife, you can cut as much as you want. So what happens in this case, like your pension fund monies, is that the custodian is separate from the manager. So the yam is held with one party and the knife is with the other party. And what asset managers do is that they simply say, okay, this person, this is the objective of this person, so invest in this instrument because this ties to this person's objective. But it is not as if banks are bad. Banks are, with the recent recapitalization, the Nigerian banks are safe, but it depends on what you want. Because if, for instance, you want to buy a commercial paper, if you want to invest in Euro bonds, you may not be able to do that in a bank, but fund managers or asset managers can do that for you. So they're both safe. The likes of Cowrie-wise, Bamboo, they've been around for a while. Always check to see that they are licensed and who the licensing authority is. And that way it gives you some measure of comfort. There is also a new application. I can't remember the code. I'm sure that my colleague, if she has it, she'll just put it on the chat box. There's an application, a short code that you can type, I think *883 something. I'll get that before the end of this session, and to check whether an asset manager is regulated or not. And that was recently launched by the Securities and Exchange Commission. So it gives you extra comfort. There was also a question on how can one benefit from compounding interest? Compounding interest, in very, very simple terms, is a way of beating inflation. So you invest 5 naira, you make 1 naira on 5 naira. The average person would take that 1 naira and still have the 5 naira. But if you invest 5 naira and make 1 naira, and you say, okay, I'm going to just use 20 kobo out of this 1 naira, and now invest 5 naira, reinvest 5 naira, 80 kobo, you find out that your interest would grow at a much faster pace. And that's what we say when you want to compound. It's just about sitting down, and thankfully everyone here is scientific. It's just about sitting down and understanding the numbers. If I want to do an investment for 1 year, and the company says to me, it's 15%. Will I do 15% for 1 year at a stretch, or would I do 15% for 180 days, earn my interest, and reinvest? I'd rather do the 180 days, assuming the interest rate is stable, because at the end of the year, I would have made slightly more than if that investment was for 1 straight year. So it's just understanding and that's why I say it's always good to have people to speak to, and we've presented ourselves as people that you can speak to. Then the 5th question I had was treasury bills and bonds. What's the difference between treasury bills and bonds? Treasury bills are always offered by a sovereign. By sovereign, I mean a country. In Nigeria, the treasury bills are called the NTB, which is short form for Nigerian Treasury Bills. And they are offered by the government when they want to mop up money. If there's excess money in circulation, mop up money, or when they need money for short-term funding. So they come to the market and they issue treasury bills. Individuals like me and you can buy that treasury bill. There's what we call a primary market and a secondary market. The primary market are for institutional investors, because for you to buy at the primary market, you will need at least 50 million naira. And most people like me do not have 50 million naira. So what do? We can now buy from the secondary market or through your bank. If you go to the bank today and you say you want to buy treasury bills at the 1 year treasury bill, 180 day, or the 90-day treasury bill, they have bought in blocks of 50 million. right? Because they are primary market operators, and then they can now sell to you at a discount. So assuming they were getting 17% on that treasury bill. When they are selling it to you, they sell it into you in a way that you will not get 17, but you may get 14.5. You're not complaining because 14.5 is better than nothing, and that's how it works. So for treasury bills, you can also compare different institutions to say, I want the 91-day treasury bill. I want the 181-day treasury bill. What are you selling at? For treasury bills, you have the option of collecting your interest upfront, that's at the beginning of the investment, or back end at the end of the investment period. Now, bonds, on the other hand, are long-term. There are different types of bonds. They're corporate bonds that are issued by corporate organizations. As long as it's long-term, it is a bond. And the bonds have different purposes. We have the common one right now is the sukuk. The sukuk is the Islamic bonds. There are some places where you drive past via you see commencement point of sukuk for bond. So sometimes government needs to do some infrastructure project and they raise bonds. Those bonds, please confirm that you can hear me. Those bonds are long term. So for maybe the next 30 years or maybe the next 5 years, they will pay what they call a coupon. Now, if you buy a bond, there are two things that can happen. You can hold the bond to maturity. You will continue to get your coupons twice a year. And then at maturity, you will get the amount that you invested. Remember that you've continuously collected returns, sometimes for 30 years, sometimes for 20, some shorter. And then you can sell your bond. If you bought a bond at, say, 100 naira per unit, it is possible to sell that bond at a higher price, at 105, 104, depending on the forces of demand and supply. And so your fund manager would also monitor the prices of those bonds, and they can advise you that, oh, you want to sell, don't sell now because the bond is trading at a discount or the bond is trading at a premium. We also have what we call Euro bonds. Euro bonds, as I said, are denominated in dollars. It is issued by a company or the Nigerian government, but they want to raise dollars. They don't want naira. So a good example would be Seplat. Yes, the Seplat bond. Seplat has a bond that's trading now, and that bond is issued is a Euro bond. That is because Seplat does oil and gas business, and so these are things that are usually priced in dollars. Their equipment are sourced abroad, are priced in dollars. Their gas is sold and priced in dollars, or rather they are crude. So they raised a Euro bond. Now for individuals, again, to buy a lot size of a Euro bond is about $200,000. Just like me, we may not have that kind of money. So your asset manager can break it down for you into smaller parts because they are able to pull funds from various institutions. So Dr. Agatha, Dr. Folashade, Dr. Halima can bring in their little amounts and they can have the advantage of this, investing in these bonds. And most times when you keep money in a domiciliary account, you actually will pay your bank to keep that money for you. If you invest in a Euro bond, you earn a return. And again, you can also sell that bond at a premium or a discount. So those are the 5 questions. I hope I've shed some light on those questions.
Thank you very much. Thank you very much, Yvonne. Thank you so much. Well, before we move on, before I call on the tax experts that would be taking us on the next presentation, we have 2 hands raised. So let me just quickly call on Dr. Halima to unmute and quickly ask your question. Then after the tax presentation, we will go back to the chat box and then take the questions. However, Yvonne, may I request that you put your contact details in the chat box? Okay, so Dr. Alima, if you're there, kindly unmute and ask your question. If not, Dr.
Okay,
okay,
good
Dr.
morning.
Good.
My question, I actually asked it earlier on, but it wasn't seen about the voluntary, that one that you can do alongside
Yeah.
with the pension. Maybe an example on what exactly is that? How can you go about it? Who can you speak to help you in getting that done?
Oh,
That's the voluntary contribution you mentioned
yeah.
that will not be
So
taxed.
if you want
I
to
don't
do a
understand.
voluntary contribution, let me start for those who. Okay, so I was saying, so let me use numbers in this to drive home the point. If, for instance, you earn 500,000 and you don't do pensions at all, tax is applied on 500,000. If you do pension of 100,000, again, this is an analogy. The federal government or the Nigerian government would not apply tax on 500,000. They will now apply tax only on 400,000 because 100,000 is going to pension by law. You know that they say you must pay 8% of your total emolument, and the government would pay, if it's government or if it's your employer, at least 10% of your total emolument, meaning that 18% of total emolument goes into your pension account monthly. On the other hand, you want to reduce the volume of tax that you're paying. So it means that 400,000, if I want to reduce the tax I'm paying, I should do more pension. And I can only do that by doing a voluntary contribution. A voluntary contribution. So I'll ask my HR or the payroll department, if I'm in the private sector, or the appropriate authority in the public sector, to say, deduct XYZ in addition to my pension. Now, once the money gets to the PFAs knows that this part is mandatory pension and this other part is voluntary. So at the end of the day, what you are remitting as pension is higher than what your colleague is remitting as pension. And so you find out that what your colleague is paying as tax is higher than what you are paying as tax, because your expendable income, a portion of it has gone into voluntary contribution. To start a voluntary contribution, you speak to your HR team or your payroll team and ask them to deduct an extra amount, whatever amount you want, and then it reduces the tax burden. I don't know if I've answered that question, Dr. Halima.
Yes, thank you very much. But deduct as what? Into what?
So when they deduct, they will transfer to your pension fund administrator. They can't deduct it, and it has to go to your PFA. Yes.
It will be sent into the pension.
Yes, please. It will be sent into the pension.
Oh,
and when it is sent into the pension, what you can do when it gets to the pension is to tell your PFA, I want to access a mortgage. And your PFA would say, okay, your statutory contribution can afford you that mortgage. If it cannot afford you the mortgage, they'll say add your voluntary contribution, and you'll be able to access a pension, a mortgage at there's what they call the MERIF home loans, and you can access that at, I think, between 8 or 9%, but I know it's single digit.
Okay, thank you very much. I'm
You're
grateful.
welcome.
Okay, thank you very much. Because of our time, Dr. Taiwo, please, let's just have you, and for your question, you have your hands up, please, Dr. Taiwo. You can unmute and speak, Dr. Taiwo. Okay. I have EOS.
Okay, thank you very much. Thank you to our speaker. My name is Dr. Shume from Esther. I wanted to ask, you have usually when For example, there's some banks that have this on the app where you have investing, and you see that there's some of these bonds that they put as fractionalized trading enabled. And
Exactly.
you have some, yeah. So what do those ones mean? Because I see that even though they are FGM bonds or you have Sukuk bonds, you see that some are under those fractionalized trading enabled while others are not. And then I also
So,
wanted to ask, when you say yield to maturity and they put a particular percentage, what does that mean? Thank you.
okay, thank you very much. As I feel like I'm speaking to a fellow finance person listening to you, doctor. So fractionalized means that you can buy, means that you can buy it in smaller lot sizes. Or I give an example of the minimum amount for treasury bills and then the minimum amount for Euro bonds, for example, and the minimum amount for the FGM bonds. Now, a fractionalized lot means that you can invest in that thing, but you can invest with a smaller amount. So most likely what has happened is that the bank has already taken a position. The bank treasury unit has taken a position and they are selling to you in smaller sizes. So that those kind of investments would offer you marginally higher than what your fixed deposit will offer you. Now, the yield to maturity is the actual return that the instrument is offering to you. Okay, because most of these instruments that you would see yield to maturity would be instruments that are discounted, and the discounted instruments are your bonds and your treasury bills. So when you see yield to maturity would be, assuming you buy this today, right, and you hold it to maturity, this is what the yield would be. This is what your money would have returned. So that's what it simply means.
Thank you very much.
Thank you very
Person, thank you. Dr. Shomefo, you still have your hands up. Do you want to?
We have to wrap up.
Okay, thank
Yeah,
you.
we still have another lecture.
We still have another
much.
lecture. Come back to the questions in the chat box, but we still quickly need to take this burning issue. We need to talk about our tax. Ndidi, do we have our guest speaker ready? Ndidi.
Hello, good morning, ma. I will notify you now.
Okay, thank you. Thank you. Okay, while we are waiting, maybe we should take the questions. Yeah. Please, if you have not signed the attendance sheet, kindly click on the link, the form, and then kindly fill the form, please. Please fill our attendance sheet, please. Thank you. So somebody asked this question, Mrs. Yvonne. She said, "Thank you so much for this insightful session. Really appreciated. Please, you mentioned about two forms of good assets, liquid assets and what's ma? She couldn't remember the second one. So please, could you give us the second type of asset, liquid assets and what?
The ones that appreciate in value. Liquid assets and assets that the values would typically increase. I use the example of gold, which is very liquid and a good store of value. And of course, the various financial instruments can be easily traded.
Okay, thank you very much. So Dr. Ronke S. said, thank you for the presentation. Does having a trust need a minimum amount?
Well, it depends on the trustee. It depends on the trustee. So most of them would have a minimum amount. Before this time, trusts used to be for the ultra rich, but some of them have smaller caps now. So it depends on the trustee that you select.
Okay, thank you very much. I can see we have the contact details of Yvonne Akintomide in the chat box. Please do well to fill our attendance sheet, and indeed kindly confirm if you are able to get the tax expert on call. If not, can we move on? Indeed, kindly unmute and speak.
Yes, ma, we can move on while I still contact them.
Okay, thank you.
Thank you.
Okay, so while we are waiting for the tax experts to come online, and if not, we need to actually round up this webinar. This webinar is supposed to last for just an hour and
Yes,
think
please.
1
Thank you, Madam Moderator. Yeah,
hour.
we'll just wait for 2 minutes. If our tax expert is not there, we can always reschedule.
Yes, I
Thank
think
you.
that's fine. Thank you very much. So we just wait for 1 minute, 1 second. Okay, so somebody asked this question in the chat box. Mrs. Yvonne, are you there, Mrs. Yvonne?
Yes, I am.
Thank
I'm
you
still here.
for staying with us. Thank you. Good day and well done. Please, can I collect my pensions in case I need them now? Thank you. I have a business. I need money. Can I go ahead and collect my pension and quickly do the business? That's the question.
Okay, so ideally, pensions are monies you save towards retirement. So if you're still working, you shouldn't collect your pension. And by law, you cannot collect your pension if you're still working, except you've been out of a job for, I think 4 months or so, then you can access the pensions. But if you are still working, earning a regular monthly income, then unfortunately, you cannot collect the pension.
Okay, thank you very much. Thank you so much. Well, I think that we can always reschedule the tax policy discussion. That will be our webinar 2.0, where we invite our experts because of our time at this point in time, some of us need to. Okay, somebody asked a question. How can one borrow? Am I saying it well? Think. How can one borrow to invest with the high interest rates in our banking sector? Is it advisable to buy the Seplat bonds? Mrs. Ivan, what do you have to say?
Okay, so I wouldn't advise that you borrow to invest. I would advise that you start small, grow that savings, and then you can start investing. So that's my advice. For the Seplat bond, it's a euro bond. So for every investment should be guided by reason. What am I investing for? Why do I want to store USD? Because it's denominated in dollars. So if it is denominated in dollars, then and you don't have need for dollars, then why are you investing in it? So my answer to this question would be start small, except the only reason why you may want to borrow to invest is when you know that investment would give you higher returns than the interest you are paying on that debt. But if not, just grow your portfolio and then you can start investing for a purpose. Thank you.
Thank you
We really
so
have to wrap now, Dr. Nii,
yes.
so
Thank you
that we
very
can keep our
thank
promise
yes.
to keep it short and simple.
Thank you so very much. Please, a round of applause for our guest speaker today. We want to thank you, everyone, for staying with us until the very end. Thank you, Dr. Fatima. Thank you, Dr. Imelko. Thank you, Dr. Fatima. Thank you for the claps, for the love. Thank you. We started this morning talking about life beyond salary. And I believe we are living here with a much clearer prescription because she gave us different prescriptions. So we are going to choose one for our financial health. A massive thank you to our guest speaker, Ivan Akinsomide, and the team at Regios Asset Management for demystifying wealth creation. And of course, we know we'll schedule the tax law. We'll get back to you, and then we're going to have a webinar, Wealth Creation Webinar 2.0. You have given us the tools to ensure our hard work as medical professionals translate into long-term security. To our very dear President, Dr. Ime Ukon, for making this happen, and the entire M1 Lagos. And for those of us on this call, we say thank you for prioritizing financial empowerment. To all the doctors, to all the professionals, everyone on the call. Remember, wealth isn't built in a day. It's built by the decisions you start making today. Please look out for the session recording and the resources Mrs. Yvonne Akintomile mentioned. We will definitely share with you via email. That is if you have registered, we have signed our attendance sheet. I am Dr. Oniyire, and it has been an absolute pleasure moderating this Wealth Creation Series 1.0 with you. Let me now call on our very own Dr. Ime Okon, President MWAN Lagos, for the closing remarks. Thank you very much. Dr. Ime Okon, we're ready for your closing remarks.
Dr. Onirire, you should take a side hustle as MCO. I will be your manager and be collecting on your behalf. Thank you so much. Assistant Secretary, please repost again for the umpteenth time the attendance link. Some people are still asking for it. Please post. Madam Yvonne, we want to thank you so much for making it so simple. I have never, so I've lived with finance experts all my life. My husband is one, my son is one. But never has anyone taken time to explain to me like this in layman terms. And when I say layman terms, my own language, which is medicine. Can you imagine comparing savings with intravenous drip? I've never seen that kind of thing before. And our surgery as what again? Is it bonds and assets? Wow. We can't wait to have your slides. That is you are amazing. In fact, when Dr. Faith said, Dr. Yvonne, I said, please, Dasha, we have given our honorary doctor after all. She has been with us since Usman Danfodio. Thank you so much. Honestly speaking, like I said, no, and this is not mincing words. I'm not trying to flatter you. I've not had it this good, honestly. And I'm sure very soon you're seeing another Dangote in making. In me, I don't know about the other people. I don't know about you, but I know about myself that I'm going to definitely make the best use of this that you have given to us. You have given us so much, and we pray that God will help you to gain so much because you're a fantastic woman. You and your team, thank you so much. Thank you, medical women from all over wherever you're joining us, because it's beyond MWAN Lagos. Thank you for joining us. Thank you. Enjoy the rest of your weekend. See you all at the top. I'm moving there right away. Thank you.
Thank you.
Thank you, everyone. Have a productive and financially empowered Saturday. Thank you.
Thank you. We will. Thank you.
Thank
Thank you.
You, Dr. Alima, Dr. Janet, Auntie Morenike,
Please,
Adeiza, Aderonke Olukorede,
show your
Dr. Eniola, Agatha, I sight you. Azizat, I see you. Dr. Aisha Karim, Dr. Bolaji Adeniran, hello. Dr. Bukola Obuleye, Dr. Chinyere. Hello. Yes, please. Thank you. Mommy Biron Keshoda Day. I love you. Ibi Omen, Ibi Emi Shomefun, we love you. YDF. Ife Yunwa, keep smiling. I love you. Ifeoluwa Delight, my baby girl. We love you. Ire of the Most High. Hello. My DDCST, Dr. Lillian, Dr. Lydia Egua. Dr. Margaret Obienu, all the way. Thank you so much. Thank you. Dr. Mujida. I'm saying Auntie Morenike again and again. I love you. Dr. Shotude. Dr. Lamigoke. Where have you been all my life? Prof. Elizabeth Nwaso, where are you joining us from? Mommy.
How are you? You're doing so great. Well done. It was an excellent one.
Dr. Taiwo. Our President-elect, Dr. Ishola. Yeye Odusholu. Dr. Tommy. Dr. Oseni Okare Otokunbo. I cite you. Dr. Umenze. Okay, everyone. Thank you so much. Ijoma Wako. Bye.
Thank you, everyone. So, nothing down for everyone.
Madam Secretary, Rado.
Hello, Dr. Faith. How are you?
I'm fine, ma. Thank you, mama. Thank you, ma. 5.
Well done.
Thank you,
Happy
ma.
weekend.
Thank
Ah,
you.
Ifeyinwa, I see
Hey,
you. Ever
welcome,
Thank you.
active.
Prof.
Thank
Thank
Well
you,
done.
ma.
Well done. Bye,
IJ,
everyone.
IJ,
you.
IJ, how many times I call you? If I don't see you for here, where I go beat you. Bye bye, everybody.
Wow.